And today I'm delighted we have with us Uday Sodhi. He will tell you how to become an angel investor, how to go about it. We couldn't have had a better person to talk to about this. Uday is a digital veteran, angel investor, and a startup evangelist. He has over 3 decades of leadership experience. Most interestingly, he was a business head digital at Sony Pictures Network, where he led the team that built Sony Live. Absolutely pioneering work he had done there. And after his career in the corporate sector, he is the founding partner of Curate Digital Consulting, a boutique strategy and transformational company. He has done over the past decade, participated in many startups as an angel investor. It's a long list and list which is pretty enviable in terms of the bets he has made. So here we have Uday, who has great leadership experience in the corporate world, and after that he has come to the interesting world of angel investment. So if you want to learn the ABC and XYZ of angel investing, stay tuned. At any point, ask a question in the chat box. I will take it. We are here exactly for 45 minutes plus 5 minutes, if at all, but not more than that. So we'll make it quick, fast, furious, and hopefully meaningful to all of you. So thank you, Uday, for accepting our invitation.
Thank you, Nina. Thank you for having me here. It's a pleasure to be on this forum.
So you had such a successful corporate career, cushy job, people looking after everything, and then suddenly you switch to angel investing, where you have to do everything yourself. What made you do that switch?
So, Nina, if I step back, I started angel investing way before I moved out of corporate life. My first investment that I actually made was in 2020, 2012, so which is almost 13, 14 years back. And I've been in the digital ecosystem for maybe 20, 25 years, and a lot of people around us were getting into early stage startups and building startups, and being in the environment, obviously one had access to some very smart people and people who were building some interesting stuff. So yeah, my journey was early, my journey was accidental, and like most good things, that happened to us, I think being in this space for 12, 15 years has taught me a few things.
We'll come to that. What has it taught, and how would you have done better? But there could be many first-time viewers or people who are just trying to wet their feet in angel investor, and that's the idea of this session. There could be some seasoned angel investors. There could be first time. What would you tell a person who's intrigued, who wants to be in this? What is the minimum amount she or he could keep, and how do you start? Let me put it
So
simply.
yeah, I think the start is like everything else. Start is always the tough piece. And my suggestion to everybody, whoever I talk to, and people ask me this question is obviously on a lot of people's head. Uh, you know, uh, I think it's best to take a portfolio approach. It's best to take a slow approach. It's try and understand what are your chances of success. See, the challenge in angel investment and all tech investment is that your success ratios are going to be very small. Your blockbusters or moonshots are probably going to be 5 to 10%. Uh, if 10%, let's take, for hypothetical reasons, let's take a 10% number as a moonshot idea or a success ratio. If you take a 10%, then you are saying out of every 10 to 15 startups that you invest in, you will get one big success. Now you have to give yourself the ability to invest 10 to 15 times to be able to get that one big blockbuster. Also, in India, the average ticket size of investments is about 5 to 10 lakh rupees for an angel investor. I'm not talking of a group or a syndicate. I'm talking of an individual. An individual probably investing 5 lakhs, 10 lakhs in that range. Now, if you're investing that and you need 10 to 15, then you're talking of a fairly large number. My suggestion is that you should take this over a 3 to 4 year horizon and say, I'm going to invest in 3 to 5 companies every year, probably 5 companies every year, or 3 companies every year, and build a portfolio over a 3 to 5 year period, and then let the odds of success play out for you.
Okay, great. So this is very specific, you said, the amounts, the number of portfolio approach. So let me probe a little further.
So, just to take this
Elaborate.
point a little further, that some of the things that we have to be careful about in this is not a liquid investment.
Correct.
Now, if somebody is investing, let's take 30 lakh rupees a year into 5 to 6 investments a year. So you're doing about 30 lakhs a year, and you're doing it over 3 years or 4 years, and you put in about a crore and a half over 4 years to build a portfolio of maybe 15 to 17 companies. Now, if you're doing that, remember, your period of investment could be anywhere from 7 to 8 years, maybe more in some cases. So one, I would not advise people who don't have the cash, who can put this illiquid cash for 5 to 7 years aside. If you think you will need cash in the 4 to 5 year period and you're get sleepless nights for the amount that's locked into illiquid assets, then you will have a challenge in managing your portfolio, because patience is what is needed to get better results. If you're going to get impatient and chase the founder for exits in the second year, I think you will have a problem in terms of getting the right results, and the risk reward ratio will not play out for you.
So you've kind of mentioned possible drawbacks, but tell us two, three, top reasons why people should get into angel. What is it that is so exciting about angel investing?
So I think the biggest one in this is asymmetric results. The returns in this are absolutely unbelievable if you do it right. So the I think for most of us, and for me, and I'm sharing my experience, I've looked at it from two lenses. One is taking asymmetric risks and looking at asymmetric rewards. And I think that's one side of the equation. The other side of the equation is the unlimited learning potential that you have in terms of working with people who are half your age, people who are working in technologies which are unknown to you, in they're doing things which you don't even think of. So it opens up your mind to very, very interesting things. So it keeps you younger in your head. You can't keep yourself young in body, but you can keep yourself young in head. So I think that, for me, are the two tangible outcomes that I see. I keep myself informed about what's happening. Plus, it gives me asymmetric returns, which are, unbelievable sometimes.
So let me start taking questions as they come. I've got a ton of questions, but I'm going to give, real priority to the viewers who ask questions. The first question is, are there any eligibility criteria or accreditations required to become an angel investor?
So the government of India has given some guidelines on who can be an angel investor. The guidelines are available freely. You can search on Google and get the guidelines. Basically, you need a certain amount of capital to be able to show that you have a certain amount of income on an annualized basis to be able to be an accredited. Now, there's no accreditation that happens currently, but there are guidelines on who can be an angel investor. So there's an income level, there's a how much assets that you own, and how many years of work experience or corporate experience you have in. So these are the three rough pieces that the government sets down or SEBI sets down in terms of what should be a guideline or what should be the guiding principle for being an angel investor. However, there's no accreditation as yet.
Yeah. So talking about work experience, is it necessary to have any work experience to become an angel investor? For example, let's say a graduate straight out of undergrad or grad school, can she become an angel investor straight away?
So the question is, should she become an angel investor? It's not about can you become an angel investor?
Should
You
she?
can
Okay,
become.
let me rephrase. Yeah.
So, you can become an angel investor, but the guidelines don't allow you to be an angel investor. So I wouldn't recommend you to be an angel investor. So, but can you be an angel investor? Yes, you can be an angel investor. But my recommendation to people would be you should not, because this is not something which comes very easily. This is something that requires some expertise. You need to evaluate where you're investing. So therefore, your experience, your background, your understanding of finances, your understanding of the industry, your understanding of the landscape uh, makes it that much more better. I mean, you have some light or some torch in front of you to show you the path. Otherwise, you're in complete darkness.
So Harsha, one of our viewers has asked a question: where do you get leads or investment options?
A very good question. So my suggestion to people who are getting into early stage investment and angel investment is to join some sort of a syndicate or a platform or a network. That's the best way to, get your feet wet and to figure out how things are done. Don't start on your own without any help or support. Like everything else, you need some hand holding, coaching, some mentorship in some way. So my suggestion is join a network, join something like an Angel List or Let's Venture or IPV or
Yeah.
whatever, just Venture Catalyst or something. There are 3, 4, or maybe 5, 7 very, very well established angel networks in the country,
Okay.
including Indian Angel Network. So just join some group of angel investors. Now, these networks get inbound because they're a group and they can invest together and they're able to they're able to add value to the company and also write fairly decent sized checks. They get inbound from various sources, and that becomes your starting point. Once you know how things work, then you'll obviously find your way in.
So another question I have is, how can a first-time angel investor perform basic due diligence?
Very tough. It's very, very tough. Uh, which is why my suggestion to you is join a network, get hold of a group of people. Uh, there are specialists in the market who can help you with due diligence, but normally that tends to be very expensive. You're not going to do due diligence. The other way of doing it is the other thing that I practice is if you're participating in a round where there is a lead investor. So say, for example, you're participating along with, say, for example, Ninad, and Ninad is a big investor. And as a lead investor who's putting in a fairly large check, if he's doing the due diligence, then dip into the same due diligence and you ask them to share the due diligence with you, or you trust that they've done a good job.
So let me push you further on the role of a lead investor. So what does she do? What should other investors, follow or track lead investor? And what is the importance of a lead investor?
So I think the lead investor is a very, very critical part of the ecosystem. Now, most lead investors are either micro VCs or are a group of or a syndicate or a network of angel investors. Now, these guys are obviously is putting a network together or a group together because of their collective understanding of the category, their collective understanding of how the ecosystem works, and their ability to not only do this round but to do future rounds. So one of the key criteria of the one of the key contribution to the key lead investor is not just invest in this round, but also help in the next round and the round subsequent. So he is the one who's really the sutradhar and building the real value in the company, and therefore it's important that you work together with a lead investor.
Great. Let me move on to a little bit of your process of evaluation and decision making. We have covered how to become angel investor, and they will be happy to take any more questions on that. Let's move to the next part of evaluation. What are the top three traits you look at in the founder, not the opportunity in terms of market share? Let's say just focus on the founder. Three or two, whatever traits you look into a founder before you take a decision.
So let me talk about preferences. In my head, what are the preferences? And there is no formula in this, it's an algorithm, so it's a fuzzy logic at the end of the day. So, one for me is founder market fit.
Okay.
So, is there something that the founder knows that most other people don't know?
Okay.
Is there some insight that he's got about the consumer or the industry that most people don't have? Which is one. So the second is, does he see the problem differently from most other people? Some of us who've been very long in a certain industry just have too many blind spots.
Yeah. True.
And therefore, a youngster coming into it or somebody coming in fresh might have a way of looking at it very differently, and therefore can break through in spaces where most mature older people may not. So for me, the founder and his understanding of the market and the way he looks at the market, and is there a different way he's looking at the market, is important. Sometimes for me, the founder, just his brashness is important to me. Some of the founders are really, I will make this happen. The passion that they bring to the table is overwhelming, and then you're saying, this guy might be able to pull off something. So for me, those are 2-3 things that I look for. A couple of things that also I look at. One is, does the category that he is operating in, does it have any tailwinds, and therefore will the founder get some extra push behind him? But at the end of the day, one of the things I'm always looking for in a founder, does he have any unfair advantage?
Okay. Unfair.
So the unfair advantage can be his understanding of the market, his passion, his co-founder that he has, or the combination of founders and co-founders that they put together. All of these things then come into play. So it is a fuzzy logic, but this is the way it works.
No, today we want all your fuzzy logic to come out. That's
Yeah,
what.
I wish I could put this in an algo and just publish it somewhere.
We are recording this, so I'm sure.
Okay.
Let me flip it on the other side. These are the traits you look at. What are the red flags? You will not touch this guy, even if market is great. For example, one of the things which we always follow is founders to be 100% full-time in the business.
Oh, that goes without saying. So one is cap
Come
table
on
and
to
one is founder. Cap table, clean cap table.
Okay, clean cap table. What
Clean
are
cap table means, no cross holdings,
Yeah.
no, some uncle owns this and auntie owns that, and, my forefathers have a business and that owns something. And, governance is very important. So
Sure.
it has to be a clean cap table. Also, the founder himself has to be transparent and open. Some of us, and you obviously meet many more people than I do. in the first 10 minutes, you can figure out whether this guy is transparent, open, and is ready to share stuff or not. People who are not transparent and people who are not ready to share, share stuff like this works for me, this doesn't work for me. If he's only pitching a positive story, then I'm very scared. Because it's very unlikely that you're pitching a beautiful story and then saying, there are no risks and I'll conquer the world and whatever, whatever. And then he's coming for investment also. It's very unlikely that is the situation. So you need people with real experience, real background, people with real fear, people who want others to be around them, handhold. The other thing which I'm more or less started now uh, thinking in my head is single founders sometimes give me a, you know, uh, single founder is not always optimal. If there are two founders, I would prefer two founders who come from different backgrounds. But then, like fuzzy logic, we always will break that rule. But I would prefer two or three founders. I would prefer a group of people who are working together on something because group dynamics is something that you'll understand quickly. People are working together from different backgrounds and people who are working with different skill sets together. Because these companies take 7 8 years to be built, so the founder should be able to get a group of people together and work. Sometimes it also helps to ask a few people whom you know in the sector to check, do a background check kind of a thing. But yeah, uh, that is in my head. My biggest one is cap table. If the cap table is dodgy, there's no point touching the company. You'll never create value.
Yeah. Great. So, viewers, please put your question in the chat box. I'm going to take them as they come. So, there is a question, Uday, which says, how do you balance risk versus potential when choosing between sectors?
I would go for higher potential.
Correct.
So in my head, TAM is very important. So don't do anything, and this is my learning. Don't do anything which has a small TAM. So total addressable market is TAM. Look at what this business can be in 10 years from now, 7 years from now. Don't look at what it is right now. Because right now, that industry, that sector, that category might be very big. But will it exist in 10 years? Will it be important 10 years? Will it be very large in 10 years? I think that's the real piece you want to focus on. So, people tell me space tech is not here and now, but we all know in 10 years it's going to be a very large thing. So in 10 years, drones are going to be a very large part of what we do. So you take a high risk in a high potential area, you take a low risk in a low potential area.
So, talking of areas, is interesting. Rohit Jain has asked a question which is connected to that. What are your thoughts on investing in deep tech versus consumer startups?
Please do deep tech. According to me, deep tech is where the action is. Consumer tech. So in my head, how I choose consumer tech.
So he has mentioned consumers. So this looks like say FMCG consumer.
So FMCG, consumer, whatever brands or whatever, I would say in consumer brands, the business is here and now. Therefore, when you look at the potential of the market, look at what is the potential today. Because the market, the feedback from the consumer, the consumption will happen now. In deep tech, you have to think of 5 years from now. Will the industry exist in 5 years? So today, if you're doing deep tech, you have to start thinking of quantum computing. You have to think of stuff which will happen 5 to 7 years from now. So therefore, the risk is very high. The reward could be, asymmetrical in that nature. But when you're doing consumer, figure out who the founder is. Does he know something absolutely critical? Does he have deep understanding of the category? Has he been in the category or the industry for 10, 12 years? Does he know how distribution is done, how products are built? And is the category large enough today? Then do consumer. So, however, in my head, I'm more biased towards deep tech than consumer.
So there are quite a few questions, Uday. So here Shruti Joshi has asked, what is a realistic time horizon for returns from angel investment?
Uh, Tough one. Okay, but let's say nothing less than 5. So
Okay.
if you have expectations of anything coming back in less than 5 years, then I think you're lucky. It will only start trickling in after 5 years, and maybe 7 is a good number to plan. If you're
Okay.
doing an Excel sheet, plan 7.
7 years. Okay. Kapil is asking, is CCPS okay if founder valuation seems to be not realistic, but founder is confident? Your view on CCPS in general as a mode of investment? I know valuation and all that he's asking, but what is your view?
So when you say CCPs, you meaning take a convertible price or take a discount over the next round.
Correct, correct.
I'm not usually very favorable for a convertible price or a discount over next round. It's a very, very, it's a, it's, it's against the investor actually. It doesn't work for the investor, it works for the founder. Now, why would you do not a fixed price round? I would always prefer a valuation round.
Okay.
A price valuation round, you know what your risk is, you know what your reward is. The problem with CCPS or a variable to or a discount to the next round is the risk is on your head and the reward is with the founder.
Okay. So, Uday, I mean, I know your views and thank we have exchanged thoughts on this, but yeah, good that it's in the public domain now. There are a lot of questions, so let's kind
Yeah,
of
yeah.
respond. So, some of them are quite interesting or basic or whatever. Dr. Talati is asking, does it require SEBI approval? I mean,
No, it doesn't.
it does not, right? So that's a great straightforward answer. Uh, there is a question, what are the ethical red flags that signal an investor should stay away? Even
I
if,
know we've discussed that.
yeah, but just quickly, 1 second, you can just,
So I think the ethical red flag is transparency
okay,
and not having all the records clean. So, uh, because these are early stage companies, sometimes they don't have their financial systems in place. Not all financial systems will be in place, and that's okay. But if the accounts are not in place, then there is a problem. If they don't know what their revenue is and how they've calculated revenue and have they paid taxes and is GST deductible, not deductible, have they paid TDS, have they not? So these things are basic hygiene. If they don't have basic hygiene in place, then there is a red flag. However, Ninad will also tell you, and I'm also telling you, there are times we've invested in companies before they're even formed. So,
yeah, we
so
have done that.
yeah, so we all done that. So, if the founder is exceptional and, you trust him and he's done all the right things and he's a second time founder or whatever, you will back him, you'll support him. But then this is all in our head in terms of, uh, how to be careful. But if you're investing in an existing company and they don't keep clean records, please don't.
Sure. So there are two people asking a similar question, so I'll club them, Sri Harsha and one more. As an angel investor, how actively involved should you be in the startup? And the other
So,
flip side, the other person is thinking, how can angel be part of the growth story? So, connected, both are connected. So I'm taking both together.
my theory on this is be a fire brigade. Okay, don't be in their face. Most founders are exceptional founders. So if you've done a good due diligence and you found good founders, it's best to let them run the company. Let them come to you when they're in trouble.
Okay.
So be a fire brigade to them. and be accessible to them. So for me, I keep telling my founders, I will not call you, I will not hassle you, I will not trouble you, but keep me informed on what's happening. And when you're in trouble, call me first.
Yeah.
Because I want to hear the bad news from you. I don't want to hear the bad news from others.
Rohit Jain is asking, is it better to invest in pre-revenue ideas or wait till a startup has some traction?
Rohit, you have to decide what is your risk reward in your plan, or how much risk can you take, and how do you have a portfolio. And this is a portfolio approach. So if you are doing 10 companies, my suggestion is you should do 2 to 3 which are pre-revenue, and 7 to 8 which have some green shoots.
So great pitch versus a fundable startup. Sometimes both may not go hand in hand. Great pitch and fundable startup.
Fundable startup.
Fundable. So what, you may have a great pitch and still startups fail. What do you think is the reason?
So, Nirang, see, at the end of the day, 70% will fail.
Right.
And we don't know which 70% will fail. So, even after doing so many of them, you have done 200 of them. My point is, we don't know which 70% will fail, because if we knew which 70% will fail, we would have not invested. So, so this is actually a tough one to do. But, sometimes we fail because we've fallen for a beautiful pitch. Sometimes we fail because we've not assessed their execution capabilities, because they were young kids, but they were going into a interesting category. So I think the better one to look at is slightly differently, is to look at, is he a first-time founder, is he a repeat founder? Okay. Normally, when you look at first-time founders, my experience has been that these people go after small niches and go after very disruptive ideas.
Yeah. Okay.
Okay. They want to solve very small problems. So you have to help them in some way to broaden their thought process and broaden the idea and give them a larger play, but be disruptive in nature.
Yeah.
My experience with late stage or repeat founders, or second time, third and 2x, 3x founders, is they go after very large TAMs and they go after very high execution capability, because they want to build a very large company. They've realized that small company bana ke koi fayda nahi hai. I need to go after very large company. So they will go after an extremely large TAM and they'll go after amazing execution capability. Okay. They don't go for very disruptive high-tech models. So the interesting piece for you is, how do you evaluate one versus evaluating the other and be able to then take risks accordingly?
What role does luck play? This is a question. This is not my question. So if you are Uday is a successful angel investor, what role would luck play in that? If I have to,
Very high.
very high.
Very high. So because we don't know which 70% will fail and which 70% will succeed. So, I meet 3 founders a day, roughly 2 to 3 founders a day. I at least attend pitches or see pitches of 2 to 3 founders a day, if not more. Now, we'll regret all our life for not investing in some of them, but I've been fortunate to have a success rate which has been fairly decent. So, I can look back and say that I've been lucky. But, like everything else in life, the more you do it, the more luckier you get.
Yeah, and the harder you work, the more luck.
Because, I keep calling it luck, others call it luck. But at the end of the day, I think there is an algo which gets built in the brain, which makes your luck work better and better as you go along.
Vedant Rathi is asking, how do you balance supporting impact-driven startups while achieving strong results? So let me rephrase this question. It's an interesting question, and I also kept guiding it. Should your thesis be impact-driven or a pure, profit-driven? And if it's impact-driven, should you mix it or have a separate thesis totally?
So at the end of the day, Ninat, I think being an angel investor is an impact in itself.
Right.
You're a catalyst who is pushing, who's supporting a new company formation.
Yeah.
So you're creating an impact from day one. And I think that deep down is a satisfaction that you get as an individual investor, that yes, you are creating an impact. I don't believe in very sector specific investment or being only impact or going after impact. I think as angel investors, we are catalysts in building early stage startups in this country, who then go and become very large companies or create employments or create disruptions or move the needle in technology, deep tech for the country. So I think for me that is impact. Uh, every new job we create, every new company that gets formed is impact. I wouldn't focus so much on just impact as a terminology, but impact at a more larger 360-degree level.
There's a question which says for investing abroad as an angel investor in companies outside India, what are the legal or regulatory concerns or requirements?
So investing abroad is not easy. Okay. And my suggestion to people would be to please read this carefully. Please talk to your chartered accountants carefully. There is a fair amount of procedure required, or there are enough hoops and loops in this whole overseas direct investment. So equity investment in unlisted companies outside India is governed by RBI. And it is not an easy process for an angel investor, individual angel investor, to go through those hoops. It is preferred if you go through an alternate investment fund route, AIF route, or go through a network of investors like the Indian Angel Network or Angel List or Let's Venture or IPV or whoever venture catalyst. Those networks, because they fall under the AIF SEBI guidelines, they have a far better approach, or they have a far better way of investing in international companies. However, my personal focus is only on companies based in India.
Okay. So, ladies and gentlemen, we have exactly 7 more minutes. If not a couple of minutes, I can ask Uday to extend. But if you have questions, the time is right now. I'm going to blast 7, 8 questions, and Uday is going to respond in a crisp manner. But if you have something bothering you, just put it right now. This will be probably your last chance. So I already have 2, 3 questions here. Uday, this Kapil is persisting on a question on CCPS. So let me read it. Where founders' valuation is not aligned with market realities. That's his basic. But founder has strong conviction. Is CCPS a good middle ground?
So, are you asking from a founder's point of view, or are you asking from a investor point of view? I am speaking from an investor point of view.
Yeah.
Okay. Now, the founder obviously wants the best deal, and I'm putting it out there. In a CCPS, when he's giving you a discount over the next round, the founder is hedging his bets, and the investor normally, in my experience, has been is the loser. Now let's put it in practical terms. Let me share practical examples. What is the discount you will get to the next round? So say, for example, most term sheets or SHAs that we see today, or agreements, CCPS agreements we see, most of them will say 20% discount over next round. Okay. And if the next round happens in 12 months, which basically means for all the risk that an investor is taking, he's getting 20% return in the first year. The first year is the most risky year, and you're getting 20% returns on that. In today's day and age, in public markets, I can get 12 to 15% in a mutual fund. Why should I take all the risk in the world in an unlisted company with a new founder in a new company and then look at yourself at a 20% discount in the first year, it just doesn't add up in my head. Now, some founders obviously are saying, no, no, I'm going to be the blazes and I'm going to go all over the place and blah, blah, blah. In that case, my suggestion to you is create a very tight floor and cap in the CCPS. If your floor and cap is within your thought process and you're saying, no, the upside is also then taken care of, then you're fine. Otherwise, you will have a problem. So if the cap is not very high, then you're fine, because then even if he raises at a very high valuation next time, you're not getting just the, you'll hit the cap and not hit the 20% discount over next year, over the next round. So, it's a numbers game, but that's the best way to do it. What do you suggest, Ninad? Is this?
So, this is a topic I think we'll have to have a separate session. It's
Yeah, term sheets and agreements can be a topic of discussion.
So I think, see, it's a matter. You have given a very fair perspective of how you think, and you have articulated, you're very clear why you're not in favor. And of course, Kapil or whoever asked, you have a reason to do it. So in this business, there's nothing, there's no
There's
black
no
and
right or wrong.
white.
Everybody has a view.
So you should now take a call based on, what do they say. So there are a lot of questions. So just now crisply, I want to just
Sure,
take
sure.
questions. What level of product development or MVP is sufficient for considering an angel investment?
I I would like to see the MVP. I would at least like to see, something out there. I don't want to go into a blank slate. The blank slate is normally very difficult. So you want them to do some work to reach a point where there is some proof that they've created an interesting product. Because sometimes products can be in the head and they've not really coded it, or not created an MVP, or not created even a prototype. I would want to see, as far as possible, the product is close to a working model.
So I have last two questions and then we'll wind it up. And this is something I really want to ask you. Emotional conviction in a founder. He pitches well, you like him, her, they're transparent, all everything clean, captable, all the tick marks. But data is telling you otherwise, saying, oh, crowded market, or, no, this. How will you go? What will you give?
I
Where
will go with the founder.
you'll go with the founder? Great. See, straight answer. As you know,
So, in my head, the founder will find an answer in spite. The only thing is, if the TAM is small, I will not go with anybody. If the size of the opportunity is big enough, I will still go with the founder, even if it's a crowded market, even if there are 200 people in it, they're very, very noisy. I mean, say, for example, in consumer, I mean, I would still go for a coffee brand. I would still go for a tea brand. I'll still go for some of these skincare brands. In spite of the market being overcrowded, if the founder is good and the team is.
see, there you are. You can go to Uday if you are in any of this. He already told you his biases. But let me probe you further, and maybe we can spend 2-3 minutes after 5:45 also. Just extend a little bit. Suppose you are creating totally new category. There's no time. Then
I would be very nervous.
okay, fair enough.
I would be very nervous. And, intuitively, so say, for example, somebody comes to me and says quantum computing, and I
Right.
don't know the time, I'll still go for it.
Okay.
But if somebody says, I'm making some product which nobody's used, and, I'm making a comb for bald people, then I'm saying, ठीक है यार,
Karo.
try out and then see. Let's try for 6 months and then see, come back to me. But some of those things are very, very tricky because the TAM just doesn't exist. So a very good founder also is not good. So if I have 100 rupees, where would I put it? Do I put it behind somebody, average founder, very large TAM, or very good founder and no TAM?
Yeah. Great. So let me ask you a last question. There's no topic today which is complete or no discussion is over till Raat Bhairavi, as you call it, is the last topic is AI and the impact on angel investment. How much you think will Uday Sodhi get replaced by AI, or how much will Uday Sodhi use AI? Both.
So I think we end up using AI now far more than I did a year back. So a lot of a lot of decks that come to us pass through the AI lens these days. A lot of primary research, for example, some category or some product comes to me which I don't understand. I'm passing it through the AI lens to see what the category is, who are the players. So a lot of that research, primary research, I'm doing using AI. I don't think decision making is still going to be on AI. That's a tough one to do because that fuzzy logic is in my head, the experience is in my head, all of those financial decisions are in my head. So I don't think that part is good, but a lot of support functions that are happening, which is allowing us to make better decisions, will become part of the AI ecosystem.
Great. I think you've shared a lot of your fuzzy logic. You've been very, very transparent in terms of sharing your thoughts, and that's what we wanted. You've done a great job, Uday, in
So I hope this conversation can encourage a few people to become angel investors. This is we are at a breakthrough point, or what do they call it, inflection point of millions of startups coming out of India. And I think we need lots and lots more angel investors to get this ecosystem going off the ground.
great. See, you're getting a lot of thumbs up and congratulations. But let me ask you that 2012 investment you made, how much was it and how's the startup doing now?
So I don't want to give names, but that startup
How much?
gave me uh, in 2012 I invested in a robotics company
How
when
much?
people didn't know what it was. And that company gave me so much returns that I could build a pool to invest in so many more companies. And, I put almost all of it back into
Great.
this. So, yeah.
Helped you build a larger ecosystem.
Yeah, that's how it is. So, but, I had to wait 7 years. So the patience paid off. So it takes that much time. And I think this is where private markets are very different from public markets. You need to be far more patient, and it's illiquid. So it's more like real estate than public markets.
So let me do a set of quick rapid fire questions, Uday. So this will add some zing to the end of our, fantastic session which we have had of sharing your thoughts. Founder brilliance or market opportunity? What wins?
I would still say founder.
Founder brilliance. One red flag, the biggest red flag, you walk away instant.
Not having a clean financial numbers, financial statements, or captive.
If not angel investment, what would you do?
I would probably go and play tennis.
So next life, angel investor or startup founder?
Angel investor.
Continue angel. And the last one, a startup you wish you had invested in, but you didn't.
Oh God, don't. This is like rubbing, some wound or throwing some salt on it. But I think I don't want to name a startup, but I think I didn't do well in the fintech thing.
Oh,
When the
oh, you,
fintech companies came out, when the fintech wave was there,
yeah.
I just didn't understand that category. I just didn't see why lending can be so big.
Okay, got it.
I kept thinking every fintech company is only going to lend, but I didn't realize that there was more to it than just lending in fintech. And you know, I just misread that whole thing. And now I look back and say so many of those companies have become such large businesses, such large entities, and very, very profitable business. So, my head rolls when I think of fintech.
On that happy note, let us bring a close to this really fantastic session. Uday, you've really been very, very frank and forthright in your sharing your thoughts and experiences, and hopefully it would encourage many of the viewers who've come here to start their career in angel investing. Thank you again, Uday, for agreeing to come on this platform and sharing your views. And thank you, viewers, for joining in this Startup Buzz every Thursday, 5 p.m. One last closing thought from Uday, and then we'll wind up.
So my thought to everybody is please try this out. You know, we're always, you know, the angel investment is a community. Nobody can do it individually in my head. I think we are all a group, a network, a syndicate, whether it is formal or informal. As angel investors, we probably about 100, of us in Bombay. We all talk to each other. We all connect with each other in some formal, informal way. Because at the end of the day, not one of us can make a difference, but all of us together can make a difference and help founders build very large companies in India. So I'm happy to accelerate this. I'm happy to encourage people to join in, happy to handhold people who want to get into it. So all the best. This is a great place to be.
Thank you. Thank you, Uday.
Thank you, Nina. Thank you so much for this interesting session. It was very nice talking to you again and again and again. This is so good. Thank you.
Thank you. Thank you so much. Thank you. Bye bye.